welcome everyone. My name is Nancy Cairo and I work for ABPA as the East Africa Regional Director. Welcome to our first pitching event for 2023. We're really excited about this and we hope you'll also benefit a lot from the information that's shared today. For those of you who may not know much about ABPA, let me take a few minutes to give you a high-level profile of our organization. ABPA is a network of social investors collaborating to increase the flow of financial, human, and intellectual capital towards impact across Africa. Across Africa in the impact space. We were established 4 years ago with a mandate to mobilize, connect, and support the collaboration of social investors towards greater impact on the continent. As a networking organization, we focus on serving the entire continuum of capital providers, and that encompasses a wide cross-section of players from philanthropic organizations to impact investors, from debt and equity providers to government agencies, and even DFIs. We also consider non-financial providers in this continuum, like accelerators, incubators, research firms, and universities. So that's just to name a few. ABPA serves this growing continuum of capital providers through various initiatives and events. Our service offerings include, but are not limited to, networking events, providing our constituents with a pipeline of investor-endorsed deals. In a few minutes, you'll be hearing more about our pipeline of our deal share platform from my colleague, Abu. Capacity building programs, which I'll talk about a little bit also. We have a gender platform designed to help players in the gender space share best practices. We also have a value hub, or what you might call a knowledge center, which is a repository of research publications, case studies, and global insights. So we're always looking for, if you have any publications you want to highlight, we're always looking for other material for our knowledge center. We are a Pan-African organization with offices in Kenya, Nigeria, and South Africa. And we also have a sister network, networks across Europe, Asia, and Latin America. This enables us to deliver continent-wide support, fostering learning and collaboration, sharing lessons from across the globe. And last but not least, connect African social investors to peers and resources from Asia, Europe, and Latin America. So we're a growing consortium of players. I'd be remiss if I didn't use this platform to announce this year's capacity building program. As you can see from the slide, we have 4 exciting programs this year, all focusing on building the capacity and the capacity of participants in terms of impact investing and catalytic capital instruments and strategies. If you'd like to sign up for any of these programs, please contact my colleague, Abu. Abu, maybe you can put your email address in the chat. That would be great. We will soon be circulating more information on each of these programs, so keep an eye out for any promotional material. Many of these services will soon be offered as membership packages, though. So I also want to take this opportunity to announce that we are opening for membership, official membership in July. Right now, a lot of our services are free, except for the capacity building programs, but right now, most of them are free. So again, please let us know if you'd like to sign up for membership. There's a link, maybe Abu, you can put a link in the chat box that will take you direct to the expression of interest form on our website. And Abu will then follow up with email giving you more information on our very reasonable membership rates. And now I'd like Abu to take over and talk a little bit about our deal share platform. Over to you, Abu.
Thank you very much, Nancy. As you can see from my screen name, I am in charge of communications at AVPA, and I'm going to take a couple of minutes maybe to just talk to you briefly about one of our platforms. So as the name suggests, the Dealshare platform is a membership section. Like you have to be a member of the platform where we share deals. So it's a space for diverse social investors, all the categories that Nancy mentioned in the introduction. So the Dealshare is a platform for all those categories to come and share information on the deals they are funding or they want to exit. Either can be financial or non-financial. So we do this to achieve three main objectives. So the first one is to help you find deals. So once you join onto the platform, you will have access to what the other members have listed on the platform. And then once you see what's on the platform, and then you can choose what you like or what fits your needs, you can endorse a deal. We'll look into that in detail shortly, or you can collaborate. So financially or non-financially, at a high level, the Dealshare platform really serves the concept that we call co-investment really well. So how it works, first of all, you have to join. So to basically subscribe. Once you come onto the Dealshare section of the website, we will ask you for your information about your work, the type of capital you're handling, who you're giving it to, like regionally, whether it's a specific type of companies or organizations, or it's a specific region. And after you come onto the platform now, we approve your membership, we list you, you will have access to the other members of the platform. In so doing so, you can endorse a deal on the platform, although it is done mostly off platform, but the connection is done on the platform. And then you can also get to engage other members of the platform. So literally, it is very tailored for connection and collaboration. You'll have contact details of the other members, then you'll also have the deals available for co-investment or the ones that you can take over if an investor is exiting it. So a good example of how this works, especially in regards to targeted services or information, is this session we're having today with our guest speaker, Lisa, who is a very good member of the platform and great supporter as well. If you have any questions, you can feel free to reach out to me. I've put my information in chat, or my colleague, Tafazwa, who is also going to enter his details in the chat, with our CFO and also the Dealshare platform lead. Thank you very much. Back to you, Nancy.
Thank you so much, Abu. Now it's my pleasure to open the formal section of this webinar, the live pitching session. Please note that after the pitching session, we will open the floor to question and answers. So you have a good opportunity to ask Lisa any questions. So here to tell us more about two exciting investment opportunities is Lisa Thomas. Lisa is a founder and managing director of Samata Capital, a fund management company dedicated to making private sector investments in small and growing businesses that advance opportunities for women and promote gender diversity. Lisa has garnered more than 15 years of experience in venture capital and private equity, and has worked with companies in more than 20 countries across Africa, Asia, and the Caucasus. Over to you, Lisa. Thank you very much. The floor is yours.
Nancy, thank you so much. I really appreciate that. And I also just want to thank the AVPA team. We've been working with them now for, I guess it's about 3 years. As she mentioned, I'm running a Gender Lens venture fund. I sit in Nairobi, but we are still raising. And so this is part of our track record portfolio. And so AVPA was instrumental in helping us get to our full allocation for our second track record deal. And in fact, we were oversubscribed. So we were only looking to raise about $100,000 and we ended up around 150. And AVPA was instrumental in helping us do that. So I'm very much hoping that they will help us get to a similar result for these two deals as well. I'm going to go ahead and share my screen. Here. Well, I think I'm sharing my screen. There we go. Hopefully that loads soon. I know it can take a little bit of time. There we go. So as Nancy mentioned, we are a Gender Lens venture fund. We focus on East and West Africa with our primary markets of Kenya, Nigeria, but we also look at Ghana, Rwanda, Uganda, and Tanzania. We are sector agnostic, so that will be reflected in the two different investment opportunities you see today. One is an electric vehicle company and the other one is a skincare and wellness company. So we've got a little bit for different parties today, but both are very exciting deals. And then as she mentioned, we really do focus around diversity, equity, and inclusion. And one of the reasons that we do this, obviously there's an impact element to ensuring that more capital flows to female-led companies, but there's an even greater element related to ensuring that we're developing really good cultures in companies, because more and more research is coming out that indicates that diverse and inclusive companies actually outperform their peers by as much as 35%. So as an investor, I want that extra 35%, and I'm sure that you do too. So we're not only impact focused, but we're also very commercially return focused. So let's go ahead and jump in. The first company that we're going to talk about today is Uncover Skincare. And Uncover is a skincare and wellness company that is based in Nairobi, Kenya. They're about 2 years old. The founders came together at the Antler program in Nairobi, which is an accelerator program here. And what they're really trying to aspire to is a one-stop shop for skincare and wellness products for African women. And since inception, they've got about 9 SKUs. They started out just with 2 in 2021, moved to 7 in 2022. 5 of those were launched towards the end of last year. And they've already expanded outside of Kenya. So they followed one of their customers into Uganda, and they've just launched at the end of 2022 into Nigeria. So they are on a rapid trajectory. Which is very exciting. And they've got another 7 products in the pipeline that they're going to be launching in 2023. The way that they go about this is, and this is one of the things that we really, really love about the company, is they've developed an amazing online community and this network for their consumers. It's really focused on well-being and healthy skin and being very comfortable in your own skin. And as many of you probably already know, the target market, which is around 20 years old to 35 years old, but particularly women of color, is a very underserved market. And so they are really tapping in to the significant need that is across the continent and actually beyond as well. So let's talk a little bit about the founders and some of the leading team here. The 3 on the left, Sneha, Jade, and Catherine, are the 3 co-founders. They have a diversified set of experience that is really quite extraordinary. So Sneha is more of a consulting and financial services background. She has worked for private equity funds and investment banks, and she has worked across a variety of different sectors and in 10 African markets. Jade has deep experience in FMCG, including with Unilever and Nestle, and then also e-commerce platforms, which is very critical for this company, working with Jumia and Kasha. And she's got a lot of experience building up consumer brands, and she also happens to be Nigerian, whereas Sneha is Kenyan, and so they cover both of the big markets very, very well in East and West Africa. And Catherine is also one of the co-founders. She has an enormous amount of experience in brand building across 19 different countries. And she is a key piece here because of what they have actually built the manufacturing process on is the K-beauty, and we'll talk about that a little bit more. But Catherine is of Korean descent and has been able to make those really strong connections in the Korean market that has benefited the company. And then we also have Lalita, who is the head of product development, and she's also an advisor. She has really helped to guide the company through the product development for the 7 products they currently have, and the next 7 to 12 that will be rolled out in the next couple of years. She's got deep experience having worked with L'Oreal and on several different leading brands such as La Roche, Garnier, Maybelline. So let's talk about the market very quickly. For African beauty and skincare, it's estimated to be about a $14 billion market right now. Just within that, in sub-Saharan Africa, it's about a $5 billion market for skincare on its own. And so that's very, very large. The Kenyan market is around 300 million. We highlight this right now because that's where they have the greatest depth. But I think everyone on the call will probably recognize that having launched in Nigeria, that is a really significant market for them, and we anticipate massive growth there as well. I think, as I noted before, their target customer is the 20 to 35-year-old, and but that doesn't mean that other women of a different age category, including me, isn't attracted to their products. It really goes across the whole range. They're not a mass market brand. They're that next level up. And so what they've really done a great job is developing high quality products at a slightly higher price point, but not up in the very high luxury brand types of pricing that you see in the market, pricing that most women in most of their markets are not able to afford. And so essentially, what they've really found is this sweet spot. So those that are in that emerging middle class, for some people, this product is aspirational. For others, this is a very easy product to be able to go out and buy. They are in Linton's and Good Life, if you're familiar with the Kenyan market. So a lot of these pharmacy chains and other types of retail outlets. In fact, in Kenya, it's more than 120 retail outlets that they're already in. But they also have a B2C element, which you don't see with some of these other competitors in the market. So they really do stand out for an aspirational, affordable product that's really, really targeted for African women and the needs of people of color. And so this is the current product lineup. So they had the face sheets, which is on the left here, in 3 different SKUs, and then also pimple patches available in 2021. They were very good sellers. And then they introduced the 5 products on the bottom there in 2022. And I want to just highlight one of them. You'll see the one that's the second one in the row here, and that's the invisible sunscreen. And this is one of the things that I really love about this company is, once again, it's focused very much on health. And the invisible sunscreen has 2 elements related to that. One is all of the product, as with all the products, it is tested on skin in the local markets, and in particular, if you are someone who has a darker complexion, you know what happens when you put on an SPF that's higher. You end up getting white casting, and it's uncomfortable. You don't feel good about wearing it, and yet sunscreen is becoming more and more important for everybody around the world because of the higher UV index. And so this can help cut back on skin cancer. So when they released their invisible sunscreen in the late third quarter of 2022, it sold out in 6 weeks. So there is huge demand for their products in the market, and it's really quite exciting to see that people are just very excited about what they're putting out there. They've got 7 products for release in the pipeline in 2023, and then a whole nother pipeline that will come out in subsequent years. So I highlighted before that they utilize Korean manufacturing, and this is significant because this is considered, K-beauty is considered best in class around the world. So they actually have contracts with 3 of the leading manufacturers, and that's thanks to Catherine. And the reason why this is so significant is, one, the types of products that the company is actually putting out in the market. It utilizes some ingredients that doesn't yet, it can't be manufactured here on the continent. So ingredients such as salicylic acid. At the same time, they are making sure that they're utilizing local ingredients where they can, which includes baobab and also moringa. And over time, they do want to move more manufacturing onto the continent. But for right now, it makes sense from a supply chain perspective and how quickly they can get products to market to have that manufacturing in Korea. And you'll also note, I've got a bullet point here, it's just faster. So they can get a product to market in about 9 months, whereas in most of the markets, including the United States, it takes about 14 to 18 months. And that will be much longer here on the continent as well. Moving on to how they actually market. So they have got a very strong social media game and branding game. They've got over 30,000. I think 30,000 is an outdated number of social media followers, and it just continues to grow. 55,000 web page views per month, and they also put out a skin quiz, which within the first 3 months had 14,000 submissions. And so there's a really massive demand for these types of products in the market, and for people who really want to have help with how do I make my skin healthier. And this goes to one of the founders. The reason why she wanted to really found this company is that she herself had issues with her skin and ended up using some products that ended up burning her. And so she wants to make sure that that really never happens again to any other woman, and that they're able to get access to good products that really promote healthy skin and doesn't damage it. They are very data-driven company as well. This is one of Sneha's superpowers. She is a data hound, if you will, or as she puts it. And so she very much, and as well as the rest of the team, they look at marketing and branding from a data analytics perspective, and will incorporate that more and more as they move along. They are very client-driven as well with how they develop their products. They really want to make sure that they're formulating the products for the local market, for the local consumer. And then they're going through different channels in order to get to their customers as well. So they've got right now about 75% of their sales comes through actual retail stores, and they're in more than 100 retail outlets in Kenya. But they also go B2C, and this is really important for scale. And this was something that actually, because they were selling during COVID, it really took off. But you need to have this combination. Women do tend to like to go in and talk to somebody, maybe feel the product, try it out first before they would buy it online. And so, but once you have bought it and you know what you want, then you want to be able to buy it online and send it straight to your house. So they've really got both of those channels locked in and looking to grow that. They also have social selling channels, and this is a portion of their distribution strategy that they are looking to grow a lot more. They are positioned for significant growth and scale. Now, these are projections that Samata has done, and they are much more scaled back than what we would have seen from the company, or what we did see from the company. 2021, 2022, you can see they more than doubled their revenue over that year. They've very much increased their client or their community base, client base as well, increased their products by more than threefold. And what we're anticipating for 2023 to 2027, that 5-year period, is that we're really going to see about 150% CAGR. They're projecting almost twice that. So we have scaled that back, but we still believe that we can get a very, very good return, even if this is all that they do. They would be in about 10 geographies at this scale. But even, but there's another way to look at that as well. They could still just be in 4 or 5 geographies, but very, very deep as well. So this was 10 geographies where they've entered, with Kenya and Nigeria really playing a big role in the sales. But it could be that they pull that back and just do 4 to 5 with their very deep as well. There's a lot of ways to really achieve this revenue growth and scale over that 5-year period. So just in quick summary, so very strong management team. We're super excited about them, their vision for the company, and what they've been able to achieve. Super high quality products, really utilizing the K-Beauty best-in-class manufacturing, and we've seen that in the revenue growth as well. So they really are they're exceeding projections, and that's true for 2023 as well. The wellness and branding element is very big for us. We think that this is a key selling point. So creating this community where women feel that they can be themselves, it helps to really lock in that brand loyalty. And though I didn't mention this before, skincare is pretty counter-cyclical. So even though a lot of people are talking about potential global recession, women will continue to buy their skincare products. And so this is key to making sure that yours are the skincare products that women continue to buy. We also see multiple exit opportunities here. Obviously, if they build themselves into a really great brand, there could be an exit to a multinational skincare brand that really would like to have a presence on the African continent and would prefer to buy rather than build. There's also financial buyers who may want to come in and package this into, you know, a consumer products play. So very interesting possibilities on that front. In terms of the risk factors, there is obviously competition in the market, but we do think that they have differentiated themselves and that they will really instill a lot of loyalty among their customers. This is an early stage company. So there's always that risk of being able to execute on a strategy, especially as it scales. We've seen them do really great work so far in entering markets and preparing for that rollout. But once again, once you get, you know, really fast growth, some things may break here or there. But that's part of the role that Samata Capital will play as an investor, as well as is helping them get over some of those hurdles. And then the geographic expansion. It is a very aggressive expansion strategy. You do have to meet different kinds of consumer preferences, making sure that your supply chain is really solid and that you get over any regulatory hurdles. And then we also think that there does need to be some shoring up of some of the business professionals as well. Sneha, as the founder, has an enormous business background, and she does have a more junior team, and they are outsourcing for accounting and finance right now. But having a few more of those folks in the team over time, we think will be really helpful for them. So lastly, this is the opportunity that we're presenting. So we've been allocated a minimum of $250,000. We can go up to about $300,000. Samata has already committed $25,000, and then we're syndicating the remaining portion. We actually only have about $100,000 remaining. So we've already sent the company $100,000. We're about to do another $50,000 tranche at the end of February. And we're hoping to close that additional $100,000 by mid-March, so that our full allocation is taken up. If we do get to that full allocation, we also get to have a board seat, which helps to give us better positioning as the company grows as well. This is a syndicated deal. I want to emphasize that, which means that you're actually investing into an SPV that then invests into Naya Skincare, which is the holding company for Uncover, and that is a Delaware entity. There are some expenses related to participating, which I'm happy to go into with anyone who's interested. We keep them very, very low. This is not meant to be our business model. We just are using the syndication in order to help develop our track record for our own fundraising for the fund. Overall, this allocation is part of a $1 million seed round. And so about $900,000 has been committed, and that includes a portion of our allocation as well. It is into a safe, and it has a $7 million post-money valuation, which at this point, actually, they're going to be going over the $1 million. They've been oversubscribed. And so it'll probably be about a less than $6 million pre-money valuation, which is quite fair in this space. My understanding is that we are just going to keep barreling forward, and I'll talk about the second opportunity, and then we'll have questions at the end.
Yeah, that's correct.
Okay. But grabbing a glass of water or a drink of water in the interim. Okay, so completely change the way you're looking at things from skincare to electric vehicles. So this is another exciting opportunity, and this is one of the first electric vehicle companies that has come out of Ghana. Very exciting because it's backed by a very strong engineering team. They are currently producing both bikes and cars, which is a really different positioning in the market than most of the electric vehicle companies you see across the continent. And they also are producing their own batteries. And so that will be something that they continue doing forward, and that can become its own revenue stream later on. Right now, they're producing them for their own motorbikes, but if they become experts at this and can scale that, it could be a really lucrative revenue line for them. They've done a great job of capturing market share. They've got delivery agreements with Bolt Foods as well as Jumia. And part of this bridge round was used to buy the kits that get assembled to fulfill those contracts. And then the second part of this round is being used to really lay the groundwork for the assembly plant that will help them get to scale both for cars and for bikes. They've been around for about 4 years. They've got about 41 full-time employees. 50% are women, which includes the entire engineering team, which is not something you hear every day. Here are some of the team here. We've got George and Kakra, who are the co-founders. They both have engineering degrees and engineering backgrounds. They're also both entrepreneurs, having started an accelerator in Kumasi, and going through and making sure that they're working with a lot of different companies. So they've had a lot of very interesting experiences helping to launch other companies as well as their own. And so having co-founded Solar Taxi, this is something that they've been really thinking about for many, many years, and really wanted to have a really big impact around mobility and access to mobility in Ghana, as well as how that intersects with climate. Jemima is their head of IT, and she built their ride-hailing platform, which we will talk about a little bit. And then Arnold is their operations and HR manager, who's had a number of different experiences that positions him well to really work with cross-functional teams, which is really necessary at this type of manufacturing company. In addition to the head of engineering, the head of assembly and engineering is a woman, as well as all the engineers. The head of the battery lab is also female, and has been really leading the charge on the development of the batteries. This is a really large market segment. Obviously, the global EV market is over $4 trillion. It is really massive, and I think everyone's been seeing the rise of electric vehicles, where China is quite dominant in that manufacturing. And we'll get to how that plays into what Solar Taxi is doing. But the Ghanaian market, it's about 113 million at the moment. But we do see that is going to increase. In addition, they have ambitions to be the dominant player in West Africa, and then eventually have Pan-African presence as well. In terms of the competitors in the market, Kofa Bikes has recently launched, and there's a couple of other folks, including a Nigerian competitor who came into the market and asked Solar Taxi to do their assembly for them. So clearly Solar Taxi is the dominant player right now and for the near future. It's interesting then. What that means is that their biggest competitors are actually combustion bikes and cars. And so we split this so you can see that solar taxi is cheaper. If we're looking at the cars, solar taxi is cheaper than a new combustion car because of the import duties, but a little bit more expensive or more expensive than a used car would be. But that's on the upfront cost. If you factor in the maintenance and fuel costs over time, it actually is cheaper. And that's true for the bikes as well. And we'll see a more specific comparison of the bikes in a couple of slides. But essentially, they're really just competing with the vehicles that are traditional combustion engines. The e-bikes, they did a lot of testing to make sure that the bikes are able to actually endure the roads that are in Ghana, both Accra and Kumasi and in other cities. I'm sure those who are based on the continent, you've seen your fair share of potholes. I know we have them here in Nairobi. And so you really have to make bikes and cars very durable so they'll last over time. It takes them about 3 hours right now to assemble one bike, but once they actually have the automated assembly line in place, they'll be able to do 200 bikes a week. The upfront cost, if you can see on this table here, it's about $1,000 more than a comparable fuel bike would be, but they're able to actually, that whoever buys that bike is able to recoup that cost in savings on fuel and maintenance care just within the first year. And that's especially true in Ghana, where there's just been a massive increase in fuel prices over the last couple of years, as we've seen in other markets as well. The company will absolutely be selling these bikes outright, but they're also doing corporate leasing contracts like what you see with the Bolt and Jumia, and those actually have a higher margin. So it is something that they're really prioritizing. The e-cars, and this is going to be a super exciting development once they're able to do this at scale. So they actually brought in 24 different cars and tested them in the market to see, what were customer preferences, how were they used, how quickly did they break down, what kind of maintenance was needed. And so they were able to really get a lot of that data and narrow down what they want to bring into the market, which is shown at the bottom of the slide here. So 3 different kinds of cars as well. But initially they'll bring in semi-knockdown units, which if you're not bringing in a fully made vehicle, you actually have much lower import duties. And it comes in mainly in 3 components, so it may come in more parts, but it's the battery, the electric motor, and the power electric systems. And this is a lot more friendly to be able to assemble than the traditional combustion engine vehicle. So it doesn't take as much time. You can really get them off the line very quickly. At scale, they will be doing completely knockdown versions, and that's so that they can really tweak that for being able to customize the vehicles, cut back on import duties, and also be able to utilize a much better battery that will last a lot longer. Once again, they'll also do corporate leasing, which they have already started doing with the fleet of vehicles that they have, and they're also using them for ride hailing in the country. They have a great joint venture that they signed last year with a reputable Chinese manufacturer, and that's both for the car kits and the assembly plant. And so the bridge financing really will lay that groundwork. And then once the Series A funding comes in, they'll be able to put that assembly line in place, but they have all of that lined up. 2 other pieces that I want to highlight here. One, again, is that battery production. So this really accounts for about 50 to 6% of the final production costs for electric motorbikes and cars. And so if you can bring that down, that will really make it so that you are able to compete much more effectively in the market than other players. And so they've done a lot of experimentation. They're already doing this for bikes. So they'll be able to, over time, reduce that import cost by about 30%. Because with a complete knockdown bike and car, you actually don't have to buy the battery from China. You can just utilize the ones that you have. And then they are slowly building up their assembly capacity. Their current capacity is about 20 kilowatt hours per day in terms of putting that together, with the goal to reach the 200 kilowatt hours per day. And they are focusing on lithium-ion batteries, not lead-acid batteries. One, because it works much better in an electric vehicle, and they last about 5 times longer than a lead-acid battery does. They also have a ride-hailing app that they launched in April of 2022. This partially was a way to use their current fleet of vehicles, but also was a way to really develop Solar Taxi's brand in the market. So really building trust with clients about accessibility and reliability of electric vehicles, and it seems to have worked quite well. Towards the end of 2022, they were oversubscribed for the number of people who wanted to buy their cars, which they don't have yet, and they were quite upfront about, but there's a lot of demand in the market. So this is positioning them for significant growth. As I mentioned, they've been around for about 4 years. They've almost doubled, actually doubled their sales from 2021 to 2022. And this includes leasing and sales. I should say they've doubled their revenue, so leasing and sales revenue. And that's just with the 2 products that they have in the market. Over the 4-year period from 2023 to 2026, we are estimating a CAGR of around 170% to get them up to about $25 million. We anticipate they would be very dominant in West Africa at that point, and then the Pan-African expansion would be underway. So there would be the bikes, cars, and batteries would be available at scale, and then additional vehicles would also start to be rolling out. They actually already have a large contract from GIZ, which is a German funder, to assemble buses for them and put electric buses and put them out into the market. So there's a lot of opportunities that are coming their way. So investment positives, obviously the first mover advantage, we know that that's not always a great thing, but we think that they're creating a significant moat that it's going to be really hard for others to get over as they come into the market. They're already seeing a lot of strong traction. And they've got the 2 delivery service agreements in place and oversubscription for the e-cars already in the market. It's a very strong team, committed to what they're doing, particularly around innovation and cooperation. And then for the impact investors on the call, though, I think I talked about this with Uncover and kind of all the way through. For Solar Taxi, this is a huge job creation potential because you're standing up factories that are higher paying jobs. You also have knock-on effects in the broader supply chain where they need to have a lot more local producers of different types of parts, and also CO2 emission reduction. Once again, this is another opportunity with multiple exit strategies. So for financial or strategic buyer executing perhaps on a consolidation play, we are seeing a lot of different electric vehicle companies pop up across the continent. At some point, someone may have invested in multiple companies that are doing this and may want to roll that up over time. This could also be an outright sale to a strategic buyer. So a larger EV company, logistics company, or an original equipment manufacturer. On the execution side, so this is a young team and they've not done this at scale just yet. So are they able to really focus and hit those specific and key milestones so they can get to the point so they're able to scale really rapidly and solidly? And once again, just like with Uncover, what happens when they scale? So that's once again one of the things that Samata Capital and the other investors who are coming into the bridge round, including a venture builder named Persistent Energy, this is what we'll be working with them on. Supply chain. We all saw during COVID how difficult it was sometimes. There was lots of disruptions in the supply chain. They have not had that issue with this Chinese supplier, but it will have to be something that is strategically focused on as they scale to ensure that this the JV that they have with that particular supplier is able to meet the demand that they've got, and particularly in multiple geographies. There is rising competition, though we do think that they've created a moat for themselves. We don't know who else will come into the market, potentially better capitalized than they are and could move faster. It's always a possibility. But we do think that they have created a very good brand in the market and a good moat. Then there's the macroeconomic impacts. Obviously, we've been seeing, and this is kind of goes both ways. So there's rising inflation, which means that Solar Taxi will have to pay more. That compresses their margins. But at the same time, with the rising gas prices, people are becoming more interested in electric vehicles in the market. In addition, for those who are familiar with the volatility that has been happening in the Ghanaian market recently, the way that we've been thinking about this is that the company, having raised capital now and bringing that capital in, is laying the groundwork for the factory and for when they're going to scale over time. And so we believe that once that is in place, the economy will be in a better position. The government is working on the issues related to the government debt and some of the other volatility in the market. And so we think that the time when the factory is up and running and when they need to scale will actually coincide with a better market environment. But regardless, we're already seeing in this market environment, there's a lot of demand for their product, and they won't have even come close to penetrating that by the time they really do start to scale. So it's a double-edged sword at this point. It's a little bit counter-cyclical in this market. So once again, this page will look very similar to the one that we did for Uncover. So this is a $250,000 allocation that we have. We've invested $25,000. We have also brought on another $50,000 from other investors, and we've got about $175,000 remaining. Once again, it's investing into a Delaware SPV, which then invests directly into Solar Taxi, which is a Ghanaian entity. We'll have the same types of expenses related to an admin fee, small admin fee, and legal fees and administering the SPV. And then, of course, we'll take a small portion of return at exit. This is a $750,000 bridge round. $500,000 was taken up by Persistent Energy, and $2.5 million in debt was actually already unlocked. So they already have that funding when we put in our initial tranches. This is a convertible note that we will be investing in. It has 11.5% interest rate and a $3.4 million pre-money valuation cap, with a 25% discount rate if the Series A occurs within 12 months and 30% thereafter. So with that, I'm going to pause and take another sip of water and wait for everybody's questions. Thank you.
Thank you so much, Lisa. What a real wealth of information about those two very great sound opportunities. I see we do have already some questions in the chat. I think the first one came from Mara asking, she says, there are some competitors missing in the list. Do you know why they are not listed? I think this is for the company Uncover.
There's tons of—
No, sorry, it's not. It's for Mana. It's for mobility. We're not we're only in the mobility space.
Oh, okay.
Oh, okay. Yeah. So so you're probably talking about Mana Mobility, and there's
Max and she. Yeah, it's just like okay, maybe I can just phrase it. So we're active. So I'm from Siemens Foundation. We're active in the e-mobility space as well. And we will open smaller grant funding calls for where Accra, Ghanaian participants are eligible to apply. So that's why we're monitoring the market. And actually, it's like 2 or 3 questions. So one is, why are some key competitors not listed? Or I would just be interested. Do you think they're not relevant? And then I see from the risks, how do you see the policy risk? Like Okoda, the motorbikes are not officially allowed in Ghana. So both, let's say, this kind of taxi motorbike driving is not allowed in Accra or in Ghana compared to Nairobi or Uganda, for example. So do you see that is a risk as well? There are no feed-in tariffs for off-grid power. So there's no power purchasing agreements because the Ghanaian government has a monopoly on that, at least at the moment, how we understand. So that might make it difficult for companies to sell power, where we're kind of, as investors at the moment, a bit like trying to find out, is that a risk or is that not a risk? So what is about power cuts? They're apparently not really allowed to have like their private power supplies. Do you know anything about that? And would you agree? Yeah. Sorry, it's like a bit nerdy and a bit deep, but like it's really interesting for me to listen to your your take on the company.
So let's start with that last one there. I have not heard that vehicles like bikes and cars are considered to have their own power supply. That's interesting. That's not something that has ever come up in any of our conversations. They, at the moment, are getting power from the grid, but they are also putting up solar-powered charging stations across across Accra and Kumasi, where they've gotten permission in order to do that. They're not feeding it back into the grid. And so maybe that's the difference, is that they're only using it for the personal, the use of being able to recharge the batteries, and they're doing battery swaps as well, right? Because a boda driver can't sit and wait for the battery to actually be recharged, and so they'll come into one of these stations, they'll swap it out, and they'll go. But I've not heard anything about that not being able to be put in place, because they're already doing it. And I know that the management team has very good relationships with the various ministries that regulate cars and solar and energy, just energy and power within the country, so that they can make sure that they are on the best side possible when it comes to regulation, and they can also feed in their opinions. So I've not heard that they're not going to be able to do that, because they're already doing it. So that's interesting. There were two other pieces. One was around the competitors. You're right, Mana is there, and the Nigerian competitor, Max, they're the ones who came to Solar Taxi and said, could you do our assembly for us? So for them, they were left off. Mana, I should not have left off that grid. We were more showing just generally that the main competitors are still the combustion engine vehicles, as opposed to other electric vehicles, because they're just so small. And also because not everyone, they're only doing bikes as opposed to doing bikes and cars as well. And I know that Mana does have a big European investment that is coming in as well. But once again, as far as I'm aware, as of the end of last year, they weren't up and assembling at this point yet. So that's also another reason to leave them off the list. Okay. That's why I say competition is coming. It's coming.
Yes. No, thanks. It's really interesting. It's just like this morning, I saw a link on LinkedIn from Max, where they posted like a fleet of like 100 yellow motorcycles in Accra. So we didn't invest in them. I was just surprised, because I thought like, oh wow, they have like 100 bikes on the ground. That's faster than I thought. So it was just like actually this morning, so it was still top of the head. But like, yeah, thanks a lot for your answers. I think we do have like some similarities. We actually, like some years ago, gave a very small 20,000 grant investment to Solar Taxi in 2021. So they're like, let's say, past portfolio.
Yeah, and just on that, Max, I think they had to import those bikes. So that would have been.
Yeah, I agree. I think they're imported.
Yeah, very expensive for them to do. And then there was a middle question there that I think I have missed.
I think the one about policy.
Legality. Yeah, the policy piece. So it may not be exactly legal, but is accepted. And so there's, you see this everywhere, and predominantly it's not so much. So where they're selling their bikes is actually to Bolt and Jumia for delivery services, not as a boda taxi, right? So there is a distinction there, but also once they have, if they are doing outright sales, they don't actually have any, liability related to what the customer uses it for. But the Bolt and Jumia contracts are very specifically for delivery.
Usually a lot of these innovations, they come first and then the policy and regulations follow. Which was much, the case with M-Pesa. Thank you, Lisa. I think we have another question from Kimadi. Lisa, this is about solar taxi. What's the approximate battery replacement frequency?
Yes, changing. So initially, when they got the kits in for the bikes, it came with these batteries from China, which would fail frequently. And so they would have to cycle them out. However, they've now gotten higher quality batteries that come with the kits, but then they're also cycling in their batteries. And so it's hard to, I guess how I want to put this is because they do battery swapping, particularly for the riders that are doing the deliveries and things of this sort. On a particular, like no rider would be without a battery. So they'll always have a fresh battery that they're able to use. In terms of how long that they use, I do have that, or how long the battery lasts and the failure rate at this point. I do have that statistic, but it is buried somewhere and I'll have to get back to you on that one. But and when you say replacement, you mean actual replacement and not full charge. Is that correct?
Kimadi, is that what you were asking?
Yes.
Okay.
And it cuts across both sides in the interest of the purchaser and also in the interest of the enterprise, because this.
Oh, I think we've lost you.
We lost him. But that's what he was asking. We'll see.
Okay.
Maybe he'll come back on again. Anybody else who have questions? Anybody have questions in particular about this syndicated nature of this deal? I thought maybe some people might have some questions around that and what are some of the costs?
I actually do have a question, but it's maybe a bit more general. So what is your experience with this kind of construct of type of investment?
So this is our fourth that we've done. I'm also designing a separate facility for other fund managers to be able to tap in and do this type of warehousing. So for us, it's worked out very well. It's a simple special purpose vehicle that is set up under which everyone is a partner. Everyone who invests is effectively a partner in the vehicle. And essentially what we do in terms of the reporting and how we work with the company is exactly the same as we would do under Samata Capital. So you get reporting on a quarterly basis. We work with the company around providing technical assistance, governance, strengthening financial systems, helping with human resources, and particularly we work with them to instill principles around diversity, equity, and inclusion. And so there's a lot of effort that we will put into this investment, just as we will put into every investment under Samata Capital. And so we manage it out. We do the filings and reporting on a quarterly and annual basis to all of the investors, and then we will exit it out on behalf of the entire pool at the end, and subtracting expenses, et cetera, and then be able to send that back out, send out the return to everybody at the end.
Great, thank you. It might be helpful, Lisa, if you put your email address in the chat, if anybody wants to reach out to you. And while you do that, I just want to open the floor again to anybody else have any questions for Lisa?
And actually, let me add one other thing about the process itself. So I know this is just an initial taste of the opportunity. I'm very happy to send out these presentations to anybody who wants that information. We're also sending out our full investment memo that was approved by our investment committee to anyone who would like to see that, along with the syndication terms, so that you're able to actually make a more informed decision about whether or not you'd like to participate. And so that includes the in-depth financials, our analysis, and a lot of these other technical questions, particularly for solar taxi, are also in there as well.
Great, thank you. Anyone else have a question for Lisa at this time? I know she's shared a lot of information, and you may need, a few days to mull it over. But it would be good if you might want to take this opportunity to ask her. Okay, somebody has said yes, they'd appreciate a copy of that the information. COPE.
If you could send me an email asking for that, because I don't have everyone's, it doesn't look like we know people's names necessarily from the chat, and don't have their contact information.
Yeah, so please send Lisa, she's put her email address there. If you can write to her directly and she'll respond to you. And then the facility, the warehousing facility she was talking about, we're also hoping to be able to have a small event around that. So we'll be giving some more information about that as later in the year. Great. I don't think anyone else there are no hands up and there are no other comments in the chat. So I'm hoping everybody is sufficiently informed and just need time to mull it over, as I said, and make some decisions. And you can reach out to Lisa directly. I'd like now to take the opportunity. Go ahead, Lisa. You wanted to say something?
Yeah, and Kamati, if you want to send, I think it was Kamati you asked about the batteries. If you want to send me a quick email, I will follow up with an answer to that question. I believe the answer is 2 to 3 years, but I want to double check and get back to you with the actual answer.
Okay,
sure,
thanks. Yeah, Kimadi. Yeah, okay. Yeah, we'd like to take this opportunity now to just run a very quick poll. Abby, can we do that poll now? Just to help us, make sure that we're providing you with the kind of information that you need. You can scan the code there. It's a Slido poll. So just scan the QR code, put in the code at the bottom, 1208791. And you'll see the various questions we have. I think there are 3 or 4 questions. If you'd answer them for us, we'd really appreciate it. This is really just for internal evaluation of these kind of pitching events. And yeah, we'd really appreciate that. So I'll give people a second or two to get on. Let me know if you're having some problems getting onto the site, onto the Slido site. And I'll also wait and see if anybody else has some questions. Feel free to open your mic and ask Lisa directly if you have a question for her. There's also in the chat, there's a link direct to Slido. If you want to click on that, it might be easier. Great. Well, thank you very much. It looks like everybody is, I think they've heard a lot today and have a lot to think about. So I just want to take this opportunity to thank everyone for making time to come and listen to Lisa and hear about these 2 wonderful organizations. And yeah, let's hope we can raise the money required to help them scale their businesses. They're doing a wonderful job. Lisa, thank you so much. We really appreciate your time. And everyone else, have a wonderful afternoon. Thank you.
Thank you. Bye.
Thank you, everyone. And thank you, AVPA. Really appreciate it.
You're welcome. Thank you so much.